360-degree session. I hope I'm clearly audible and visible, and in today's session we are going to discuss a very important news article that is quite in news recently, and we will discuss a RBI press release that is released in regards to this news article. Okay, so I hope many of you have already heard that there is the IndusInd Bank crisis that is going on. So the Reserve Bank of India has recently released a press release in this regards that the depositors need not to worry and all. So we will see that what are the data points that the RBI has given in the press release and what this crisis is all about, what are the technicalities behind this crisis. So all of this we are going to discuss in today's session. So good morning and welcome to the session everyone. In today's session we are going to discuss a lot of technicalities. We will discuss a lot of terms that you need to be aware about. We will talk about internal and external trading that is regarding this crisis, and this crisis is based on the internal and external trading, and we will discuss all the reasons and the steps that have been taken till now. Okay, so good morning to all of you and welcome to the session. Let's start with today's session, but before that, do subscribe to the YouTube channel of EduTap and do join our Telegram channel, because in the Telegram channel you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. So let's get started with the hot topic that is going on recently, that is IndusInd Bank accounting discrepancy. Okay, so India's fifth largest private sector bank, IndusInd Bank, has been hit by a major accounting discrepancy. So there is the accounting discrepancy or the accounting mismatch that has been faced by the IndusInd Bank, and the mismatch is not a very small mismatch. The mismatch is a huge mismatch that has happened. So the IndusInd Bank on Monday, on the previous week's Monday, informed its shareholders that an internal review of the foreign exchange derivative transactions has notified an accounting mismatch worth rupees 1,577 crore post-tax. So this much of the accounting mismatch has happened, and if you see, this is the data. This is the data for pre-tax. So if we see the loss in the pre-tax, so it is 2100 crores. Okay, so post-tax accounting mismatch is of 1,577 crores, and pre-tax accounting mismatch is of 2,100 crores. Okay, so this is a huge number, which is about 2.35% of the bank's net worth at the end of December 2024. So this is the idea that there is a huge accounting mismatch that has come forward. Now, as soon as the mismatch came forward, it was recognized that, okay, there is a problem that is present in the IndusInd Bank and there is a huge mismatch that has happened. So, on Tuesday, that is on the next day, in the previous week on Tuesday, IndusInd Bank share crashed 27.17% on the Bombay Stock Exchange, recording the biggest one-day fall since listing. And the stock ended at rupees 655.95 per share, its lowest level since November 2020. So there is a huge loss that has happened to the shareholders, or to the people that invested in the shares, to the mutual funds that invested in the shares of the IndusInd Bank. Now, why this accounting mismatch has came forward? So now we have to discuss the technicalities behind this news article. Okay, so why this mismatch has actually came forward, and why now? Why not previous year or before that? So see, derivatives, they are used by Treasury to convert foreign exchange deposits or borrowings into the rupee. So what happens, try to understand that if, let's say, there is the deposits. So the non-resident Indians, they deposit their foreign exchange with the Indian banks. Okay, so in the foreign currency non-resident account, in the FCNR account, in the other accounts, there is the deposit that is coming from the NRIs to the Indian banks. So the IndusInd Bank also received the deposits from the other countries. Okay, now whenever the foreign exchange has to be converted into rupees, okay, there is the transaction or there is the derivative that has to be taken into account. Okay, because later on when the deposits, especially in the foreign currency non-resident account, the deposits are kept in foreign currency, or the deposits, when the withdrawal happens, the deposits has to be returned in the foreign currency. So the depositors, the non-resident depositors that were depositing their foreign currency into the FCNR, in the IndusInd Bank, in the foreign currency non-resident accounts in the IndusInd Bank. So it was said that if the IndusInd Bank want to convert this foreign exchange into the rupees, there is the derivative contract that the bank has to come in, because when the withdrawal happens and the IndusInd Bank will have to return the foreign exchange, then the IndusInd Bank should have the derivative to get the foreign exchange, in the sense that currently let's say IndusInd Bank has got $10,000 and the IndusInd Bank is converting this $10,000 into rupees, and the IndusInd Bank has came into a swap contract that after 6 months or after 1 year the IndusInd Bank will return the rupees, let's say give 1 lakh rupees and will get 10,000 rupees. Okay, will give 1 lakh rupees and will get 10,000 rupees, or $10,200, sorry, will give 1 lakh rupees and will get $10,200 to return to the depositor. Okay, so the depositor deposited $10,000 with the IndusInd Bank. IndusInd Bank, through this swap contract, converted the dollars into the rupees, and the swap contract also entails that after 1 year this 1 lakh rupees will be converted into $10,200, so that when the withdrawal time comes, the IndusInd Bank has the dollars to return to the depositor. So typically, if a bank is taking a foreign currency exposure, that means let's say the IndusInd Bank is borrowing. Next case is that if IndusInd Bank is borrowing the money, let's say the IndusInd Bank has borrowed $10,000. The IndusInd Bank has converted this $10,000 into 80,000 rupees. Okay, now after 1 year, the IndusInd Bank is saying that IndusInd Bank will be providing 1 lakh rupees and the IndusInd Bank will want $10,200, because the IndusInd Bank has borrowed the $10,000 that the IndusInd Bank is converting into the rupees, 80,000 rupees. After 1 year, the IndusInd Bank will have to return the money to the lender. So IndusInd Bank will give $10,200 that IndusInd has came into the contract, that 1 lakh rupees will be given by IndusInd. That will be $10,200 that will be given back to the lender with the interest. Okay, so this is the idea that whenever the bank, any bank, if it is taking the foreign currency exposure, that is if it is taking the borrowing or if it is taking the deposits, because these are the exposures, these are the liability that the bank has to return. Okay, the borrowing as well as the deposits that are in the foreign currency, they are the liability, they have to be returned. So it is said that typically if a bank is taking a foreign currency exposure, either in the form of foreign currency deposits or borrowings, its trading desk that is present in the bank, the trading desk must hedge, take an opposite position in the related transaction to cover the losses, if any. That is, if there is the foreign currency transaction that is happening, if you are converting the dollars into rupees, you have to take the opposite position. That means later on, in the later on period, you will have to convert the rupees into dollars, so that the foreign currency exchange rate that keeps on fluctuating. So due to that, there is no loss or there is less loss that you face. Okay, so while converting the foreign currency into rupees, you have to take an opposite position for hedging your loan or for hedging your position. Okay, because when you are taking the dollars, right now the dollars are of 80 rupees, let's say. So $10,000 means 80,000 rupees you have got, but after 1 year maybe it can become 160 rupees. Right now, let's say $1 is equal to 80 rupees. So you have taken $10,000, that means 80,000 rupees. But after 1 year, it may be that $1 is equal to 120 rupees or 150 rupees or something. So to hedge your position, to reduce the risk, you have came into a swap contract that after 1 year, I will give my 1 lakh rupees and I will get $10,200. Okay, so this is the idea that when right now you are converting your dollars into rupees, when you are converting your foreign exchange currency into rupees, you have to take the opposite position to hedge your position to reduce the risk of the foreign currency fluctuation. Basically, as this process involves a cost, the trading desk transfers the cost to the asset liability management desk. So this is the process that is followed, that the derivatives, they are used by Treasury to convert the foreign exchange deposits or borrowings into the rupee. So currently, if they want to convert their foreign currency into the rupee, they have to take a derivative contract, a future contract or a swap they have to take into account. Typically, if a bank is taking a foreign currency exposure, its trading desk must hedge and take the opposite position for the future date while converting the current currency into rupees. As this process involves a cost, so the cost has to be transferred to the asset liability management. Now, what has happened in the IndusInd Bank is that prior to April 2024, the IndusInd Bank was involved both in the internal and the external trades. They were conducted in the foreign currency exchange. So what is the internal trade and what is the external trade? So transactions that occur within the bank's own structure. This is known as internal trade. So IndusInd Bank, what it was doing and what other banks were also doing, but IndusInd Bank was doing it in a huge term, we can say. So IndusInd Bank internally hedged foreign exchange borrowers by entering internal derivative contracts with its own desk, with its own internal system. So that is, IndusInd Bank internally hedged the forex borrowers by entering internal derivative contracts with its trading desk. That means the IndusInd Bank with its own trading desk came into the contracts that right now I am converting my dollars into rupees, and after 1 year, after 6 months, I will give you the rupees and give me the dollars. Okay. So internally the hedging was going on inside the bank's own structure. The trading desk then hedged this exposure externally in the market. Then the trading desk was coming into another contract with the external party, with the third party, with the client, and then the trading desk was saying that I am giving you dollars, give me the rupees right now, and later on I will give you the rupees and you will have to give me the dollars. So this was the process that was going on. So transactions with the clients, other banks or financial institutions involving the purchase or sale of the financial derivative, this is the external trade. So IndusInd Bank was involved in the internal trade, that is IndusInd Bank internally in its own banking structure was hedging the foreign exchange derivative, was hedging the foreign exchange risk, and then there was external trade that was also happening. So prior to April 2024, there was both internal and external trades were conducted. Internal trades were accounted for using swap valuation. So internal trades, in the internal trade, the valuation of the dollars and rupees was done on the basis of swap valuation. That what would be the future value of the dollars or what would be the future value of a currency. So this was estimated. So swap valuation was on the basis of estimation. While the external trade that was going on, that was marked to market. Marked to market means that on the basis of the market price fluctuations, the contract or the profit and loss was seen, that you are making the profit or you are making the loss. So internal trades were accounted for using swap valuation. They were accounted for using the estimation, using the future prices, that what would be the future rate for this currency. While external trades, they were marked to market. So external trades, they moved with the market, they had the profit and loss situation as per the market conditions, but the internal ones followed the swap valuation, followed the estimated valuation for the future currency rates, which might not reflect the market movements. So you can understand that here the discrepancy came because the internal valuation was something else, the external valuation as per the market was something else. So there was the discrepancy that came in the accounting. Any confusion anyone has till now? Any confusion anyone? All clear? If there is any confusion, kindly ask me. So this was accounting mismatch that boosted the bank's reported net interest income over the years. Over the years, the net interest income was boosted and there was suppression that happened of the actual trading losses. So trading losses were suppressed. Just a second. So actual losses, they were suppressed while the income was shown as higher. So the real impact this surfaced when the trade was unwound or matured. So when the trade matured, then it was realized that actually the valuation is different, because here internal valuation is different, the swap valuation is different, and as per the market the valuation is different. So this was recognized later on. So there was the discrepancy that came, the accounting mismatch was there, and the real impact surfaced only when the trade was maturing. So during an internal review, the bank identified certain discrepancies in accounting of the foreign exchange derivatives or swap transactions that was executed before April 2024. Over the past 5 to 7 years, to hedge the foreign exchange deposits or debt. So you can understand this whole process was problematic. The internal trade, the external trade, it was problematic from the start itself. Why it was problematic? Because there was discrepancy that was bound to come, because swap valuation and the mark to market, their valuation were different. The external trade was fluctuating as per the market prices, or the external trade was on the basis of the market prices, while the internal valuation was on the basis of the expectation and such. So as per the Reserve Bank of India's directives on investment, the RBI's classification, valuation and operation of investment portfolio of commercial banks, there were the directions that were released in September 2023. And in the September 2023 directions, which came into force from April 1, 2024, it was said that we are prohibiting, the RBI prohibited the banks from conducting internal trades or hedging internally, and accordingly IndusInd Bank too stopped the internal trades from April 1, 2024. But before that, whatever the internal trades had happened for 5 to 7 years, there was the discrepancy that came. Okay, so RBI, you can understand that in September 2023, in the directions that were released by the RBI, the RBI had prohibited the usage of the internal trade from 1st April 2024. Okay, from 1st April 2024. The IndusInd Bank, now in the IndusInd Bank till the 1st April. So IndusInd Bank also stopped the internal trade from 1st April 2024. But before the 1st April 2024, for the 5 to 7 years, whatever internal trade had happened, in that internal trade, the discrepancy was found. Okay, so you can understand that the RBI in 2023 had taken the step that from 1st April 2024, the internal trade will be stopped. And RBI had taken this step because RBI already knew that internal trade are problematic. They are problematic because they are on the swap valuation, they are on the valuation of some expectation. Okay. Expectation, it is not speculation, it is expected, like some future value, expected, calculated, we are calculating the present value of the asset on the basis of our expectation for the future value. Okay, so this is or swaps terms. So basically the current swap valuation is the current value of the present value of the cash flows on the basis of swaps terms. Okay, so whatever the terms and conditions have been written in the contract, on the basis of the swaps terms, there was the current present value of the cash flow that was seen. So the current present value of the contract was seen on the basis of the terms and conditions of the swaps. Okay, so this was for the internal trade, while the external trade was directly linked with the market prices. So this was the discrepancy that was coming, and the RBI in 2023 itself had said that from April 1, 2024, there will be no bank that will be allowed to undertake the internal trade. But whatever happened before became the problem, and the discrepancy that has been found in the accounting is for the trades, the internal trades and external trades, or the foreign exchange transactions in the derivatives that have happened before the 1st April 2024. Okay, so I hope this is very much clear that prior to April 2024, both the internal and external trades were happening. So here you can understand that the discrepancy that has come, the accounting mismatch that has come in the foreign exchange derivative transactions, these are the mismatch that has been found for the transactions that happened before April 1, 2024. Okay, so now this is the first reason that there is the accounting mismatch that has happened because of internal and external trade in the foreign exchange derivatives. Now meanwhile, IndusInd Bank has noticed deficiencies in its derivatives accounting transactions done prior to April 1, 2024, while internal estimates peg the hit at rupees 1,577 crores. It has appointed an external agency, a reputed external agency has been appointed to identify the loss independently. So the internally the identification of the loss that has happened or the mismatch that has been found is of 1,577 crores, but a external agency has been hired independently to verify the loss. Okay. Now, besides the accounting discrepancy, the bank has been hit by a management churn also. There is a management problem that has also come. Just before the IndusInd Bank was scheduled to report its December quarter results, its chief financial officer resigned. So it was identified, or it was seen that as soon as, like before the problem started to come, the chief financial officer resigned. Okay. So before the report of December quarter was released, so before the third quarter results were released, the chief financial officer resigned, and now the RBI has extended the incumbent, the MD and CEO Sumant Katpalia's tenure has been increased by just 1 year. Actually, if the tenures are increased, they are usually increased by 3 years, but his tenure is only increased by 1 year. So there is speculation that is going on that because of the accounting discrepancy, the tenure was not increased by 3 years, it is only increased by 1 year. Okay. So this is the idea. So this is also one of the reasons that there was management problem that also came. Now, RBI statement on IndusInd Bank Limited. So what is the RBI statement that came on the IndusInd Bank? Is everything clear? Because here I am seeing that there is some network issue that is coming. Is it coming for you also? Or everything is fine for you? So RBI statement on IndusInd Bank Limited. So there has been some, now what was going on, that because of the IndusInd crisis, there were a lot of videos, a lot of articles that were coming out that IndusInd Bank is going to collapse. This is the end of IndusInd Bank. The IndusInd Bank situation was compared to Yes Bank, that okay, the same problem will be faced by the depositors, and the depositors, they started losing trust because of so many of the videos, so many of the articles that were going on in the news. So RBI had to release a problem. RBI has to release a statement in regards to this problem. Okay. So RBI had to release a statement that okay, the Yes Bank situation is very different from the IndusInd situation, because the IndusInd, if you see the financials of the IndusInd is still very stable. It has the capital adequacy that is required. In the case of Yes Bank, the capital adequacy was very less in Yes Bank. So that we will see. Okay. So RBI statement on IndusInd Bank Limited. So RBI said that there has been some speculation relating to IndusInd Bank Limited. Many of the videos and articles were coming out that IndusInd Bank is going to collapse, the depositors are going to face the problem. So RBI said that this is perhaps because of the recent events related to the IndusInd Bank, that there are so many speculation that are going on in regards to IndusInd Bank. But RBI would like to state, so RBI said that RBI would like to state that the bank is well capitalized. That means the financial position of the bank is satisfactory. Even if the bank faces the loss, still the bank is well capitalized. The bank has the capital position to handle the stress. Okay. And why the banks keep the capital position? To handle the stress, and this is the kind of stress that the bank can handle. Okay. As per the auditor reviewed financial results of the bank for the quarter ended December 31st, 2024, the bank has maintained a comfortable capital adequacy ratio of 16.46%. So if you remember the formula of capital adequacy ratio or the capital to risk weighted asset ratio. So the capital to risk weighted asset ratio is the capital that banks maintain against their risk weighted asset. So if the bank has the risk weighted asset of 100 crores, that is if the bank has given the loans, okay, the asset of the bank is the loan, because on the loan the bank is earning the interest. So there is some risk attached to the loan. So if the risk weighted asset is of 100 crores, the banks have to maintain the capital of 9 crore, that is 9%. That is the capital adequacy ratio, 9%. Plus the banks have to maintain 2.5% of the capital conservation buffer. That is, buffers have to be maintained of 2.5%. So in total, bank has to maintain the capital adequacy of 11.5%. So that is, the bank had to maintain 11.5 crore against the 100 crores of its risk weighted asset. So against the 100 crores of the risk weighted asset, the bank had to maintain the minimum of 11.5 crore capital. But here the data shows that the capital adequacy ratio that the bank is maintaining is 16.46%. That is way higher. So bank has enough capital to handle the risk weighted asset, to handle the risk, okay, to handle the risk weighted asset. So the bank has 16.46 crores of capital against the risk weighted asset of 100 crores, and this is way more than the 11.5 crores, that is the minimum that has been identified by the RBI. So the bank is well capitalized, the bank has the capital to handle the risk weighted assets, as well as there is provision coverage ratio of 70.20%, that is also very high. So provision coverage ratio shows the provisions of the bank against the non-performing asset. So if the non-performing asset, if the total non-performing asset is of 100 crores, or let's say if the non-performing asset is of 10 crores, the bank has the provision of 7 crores already, 7 point some crores, okay. So PCR is the provisioning coverage ratio that shows that against the NPAs of the bank, against the non-performing asset of the bank, how much provision the bank already has. So bank already has the provision of 70.20%, 70.20%. So against the non-performing asset of 100 crore, the bank already has kept the provisions of 70.20 crore. So that bank has good provisions with themselves against their NPAs, okay. Now LCR. So LCR is also very high. If you see the condition of Yes Bank had the when the crisis came in Yes Bank in 2020 around, so in the Yes Bank, the liquidity coverage ratio was only 37%. LCR, the liquidity coverage ratio should be 100%, while the Yes Bank only had the liquidity coverage ratio of 37%. While the IndusInd Bank right now has the liquidity coverage ratio of 113%. So you can understand that the liquidity coverage ratio of the IndusInd Bank is way more. So we cannot compare the situation of IndusInd Bank with the Yes Bank. Yes Bank had the problem, the capital was very less in the Yes Bank. The liquidity coverage ratio of Yes Bank was 37% against the 100% that is required. While the IndusInd Bank has the liquidity coverage ratio of 113% as on March 9, 2025 as against regulatory requirement of 100%. So IndusInd Bank is well capitalized, that means it has the capital adequacy ratio that is enough, that is very high. Financial position is very strong of the IndusInd Bank because the provision coverage ratio is quite high and the LCR is also quite high, okay. So LCR is what? LCR is liquidity coverage ratio. It shows the high quality liquid asset that the bank has, like the government securities, the cash and the assets, the liquid assets, the high quality liquid asset that the bank has, that the bank can use to give the money to the depositors, okay, for the total net cash outflow over the next 30 days, okay. So the bank calculates the expected or the total net outflow in the 30 days, that how much the depositors will be taking out the money, the net outflow that will happen in the next 30 days, and against this, let's say the net outflow in the next 30 days will be 100 crores. So against this net outflow that will happen in the next 30 days, that is of 100 crores, the IndusInd Bank already has 113 crores with itself to provide to the depositors, and this 113 crores, it is present in the high quality liquid asset in the form of cash, in the form of government securities, in the form of gold or other liquid asset, okay. So this is the LCR. Liquidity coverage ratio shows that the high quality liquid asset that the bank has against the net outflows for the next 30 days. So the bank is well capitalized and the bank has the liquidity coverage ratio of 113%. That means the bank has enough liquid asset to provide money to the depositors. So the speculation should not be happening. The depositors should not be afraid, because the bank has enough capital, enough liquidity coverage ratio to provide the money to the depositors. If the bank run happens and the depositors come into panic, then the problem will start, because once a panic set in, then the problem will be there, as the cash outflows will suddenly increase, and then the problem can happen. Okay, so LCR ratio for now it is very sufficient, because the value of high quality liquid asset is 113 against the total net cash outflows over the next 30 calendar days, that is 100. That is 113% of LCR ratio is there. That is minimum, the regulatory requirement is 100%, but IndusInd Bank is maintaining 113%. So basis the disclosures available in public domain, the bank has already engaged an external audit, and in terms of the problem that is present in the IndusInd Bank, the accounting mismatch that has happened, so the disclosures are available in the public, and the IndusInd Bank has already engaged an external audit team to comprehensively review their current system and to assess and account for the actual impact that has happened. Okay, so the board and the management have been directed by the RBI to have the remedial action completed fully during the current quarter, that is the fourth quarter of the financial year 25. That is during the current quarter of the financial year 25. So this is the idea, that the remedial action has to be completed fully during the current quarter, after making required disclosures to all the stakeholders. So this has been said. So as such, there is no need for depositors to react to the speculative reports at this juncture. The bank's financial health remains stable. We have seen capital adequacy is good, provisioning coverage ratio is good, the LCR is good. So the RBI is monitoring the financial health of the bank very closely, so the depositors need not panic. So this is the whole idea. I hope this is very much clear. So this was the RBI statement on the IndusInd Bank. Okay. Now, before going to the questions, I will show you the questions, but before going to that, I hope many of you know that the Perspective 360-degree series is going on for your descriptive answer writing practice. Many of the queries came that, ma'am, how I can practice or how I can improve my descriptive answer writing. So for that, Jaskaran sir's series is there, that is Perspective 360, where you get the on-hand experience to write the answers. So Jaskaran sir give the questions in the video itself, and just below the video in the comment section you can write the answers, and these answers are evaluated free of cost, so you can get the review free of cost. Okay, so this is the Perspective 360-degree series that is going on, and this is for your descriptive answer writing, to improve your descriptive answer writing, and you just have to focus on your, you can see the question and you can write the answers in the comment section, that will get evaluated free of cost. Okay, so this is the series. Now this is the first question. I hope you will be easily able to answer this question. You just have to tell that the directions that were released by the RBI, they were applicable from when. Okay, now this is the second question. This is regarding the data of the IndusInd Bank. So I hope you will know the capital adequacy ratio of the IndusInd Bank, because IndusInd Bank has become the hot topic right now. So you should have the details of the IndusInd Bank. Okay, so this is it for today. I hope everything was clear. If there is any confusion, you can ask me in the comment section. Also, you can raise your query, and do give the right answer of the homework question. Any confusion, anyone? Any problem anyone has faced in this session? Were you able to understand that what is the situation, what has happened, and what are the steps that are being taken? All clear? Okay then, thank you everyone. Thank you for joining the session. Do give the right answer of the homework questions in the comment section, and do comment down below if you have any query. So this is it. Thank you everyone. Thank you for joining.